Director sir, welcome.
Yeah,
Can you hear us, sir?
yes, yes. बाकी लोग कहाँ हैं?
Okay. Please.
Morning, ma'am.
Yeah, just leave this. On that. Rechecking audio video for all our online audience. All those who have joined us, I am assuming everyone can hear and see us. You can put in the chat box in case there is any issues.
Yeah. Arun, please. warm welcome to all the participants who have tuned in for today's hybrid panel discussion we call on the theme of unbundling of banking. Today we have with us very eminent and distinguished speakers who would be deliberating on this particular theme. And we call this particular event an hybrid event because there are people who are cohorts of participants who are attending leadership programs who are physically present here. Apart from, I could see somewhere near about close to about 100 and odd people who are getting tuned in. I think the tally now is about 78 or so. So, and we are also on live stream in social media pages of State Bank of India. So without wasting much time, we are getting started for this particular event on unbundling of banking. So over to Dr. Shoma for the official compere of this particular event for taking over and, giving the introduction to the program and then the welcome address by our director and so on and so forth. Over to you.
Thank you so much, sir. So once again, let me begin that by saying that we at State Bank Institute of Leadership, Kolkata, welcome all participants, both online as well as in the physical format. We welcome you to this exciting hybrid panel discussion, and we are fortunate to have an expert panel of distinguished guests speaking to us on the subject. At the onset, to set the event rolling, I would like to invite our director, Shri Madhukar Anand, to render the welcome address. To introduce Sir, Shri Madhukar Anand joined SBI in 1985 as a probationary officer. He has served as RM Chandigarh, DGM Business and Operations, Bengaluru City, and headed 437 plus branches under the Network 3 of Ahmedabad Circle as General Manager. He was serving as GM FINMM Ahmedabad Circle before assuming charge as GM and Director of State Bank Institute of Leadership. In his diversified career spanning over 35 years, he has inter alia held the position of COO of Nepal SBI Bank Limited from September 2007 till March 2012. Previously, he was part of the IT-ALM Treasury project at the Corporate Center from July 2002 to August 2007, where he has led a team that redesigned the bank's transfer pricing system and has also played an instrumental role in revamping the bank's asset liability management. Shri Anand is an MSc in physics from IIT Kanpur. He loves to read, travel, and is passionate about financial literacy. I request Sir to deliver the welcome address.
Thank you, Dr. Shoma, and thank you, Dr. Kumar, and a very warm welcome to Mr. Ramanathan, Director, Digital and Distribution, Way to Wealth, my very dear friend Sonny George, and Mr. Arun Ajmera. I think Mr. Ajmera, this is second visit to us at this place. Good afternoon for all those who have tuned in from Nepal, because since Nepal is 15 minutes ahead, it must be past 12. And there are so many people I can see who have tuned in from Nepal, and many of them are my former colleagues from Nepal SBI. So welcome and namaste to all of you. And those who have physically traveled here for the training, welcome to you once again. And those who have tuned in from other places, it's just about afternoon, and without much further ado, let us begin what we expect to be a very, energizing and a very interesting discussion of the unbundling of banking. So, and this is something which the subject itself kind of sounds very interesting and at times alarming too. How will it unbundle? Whether it will remain there at all, or whether it will unbundle into a better thing. So we are all waiting with bated breaths to listen to the experts. And with this, I declare this open. Thank you.
Thank you. We have with us an expert panel of distinguished speakers. It is my distinct pleasure to introduce them to you.
If we could switch it on.
Yes, just to repeat that we have an expert panel of distinguished guests, and it is my distinct privilege to introduce them to you. Though their list of achievements is long, I will keep their introductions very brief to keep maximum time for discussions. Our first guest, Sri Sunny George, is ex-CGM and advisor SBI. Sir has varied experience in areas like digital transformation, digital banking, core IT, inspection and audit, credit, retail banking during his career spanning more than 3 decades. He has been instrumental in leading and executing the mega merger of SBI with its 5 associate banks. He has led the major digital transformation initiatives at SBI through its flagship digital banking platform, YONO. He is joined by Sri Arun Ajmera. Mr. Ajmera has recently taken over as Chief Operating Officer of Rain Nation. He is a highly experienced financial services professional, skilled in managing businesses and leading them to higher profitability. He has successfully turned around several businesses. Previously, in the digital lending space, he has set up RoboCash business in India. Mr. Arun has worked in various sectors in financial services with 22 plus years of experience across various responsibility levels, from traditional to fintech. Welcome, sir. Our next guest is Mr. D. Ramanathan, Director, Way to Wealth. Mr. Ramanathan is a senior manager professional with expertise across the financial services sector in strategic planning, business development, profit center operations, sales, and marketing. He has 25 years of diverse business experience spread across NBFC, third party distribution, mutual fund, and portfolio management services. He has a successful track record of building organizations from its infancy and spearheading high quantum growth. Welcome, sir. Last but not the least, let me introduce the moderator of the panel, Dr. N. Krishnakumar. He is Dean at SBIL. As a career banker, he has more than 15 years of progressive banking experience with varied profiles. As an academic, he has led academic leadership positions and has published in more than 60 national and international journals. As a consultant, he consults on risk management, restructuring, business, and policy. The stage is now laid out for an engrossing hybrid panel discussion on the unbundling of banking. Over to you, sirs.
Thank you. Thank you, Dr. Shoma, for the wonderful introduction. And thank you to the fellow panelists who could join today. As we were explaining, we are fortunate to have a very distinguished set of panelists today. And it is the resourcefulness of them that we need to encash on. So let me keep the ball rolling by trying to make the uninitiated understand what is this particular theme of unbundling of banking. Then possibly we can be able to go deeper into the theme. As we all know that when the stack, what we call the India stack of the technology stack that was getting developed. We call it, subsequently we have named it as a sort of presenceless layer or a paperless layer or a cashless layer, consentless layer. When we say paperless, presenceless layer, it means that, the other authentication that could be actualized using the UID as a, or what we call the Aadhaar card. The way how UID authority could give each Indian a kind of an identity through another system, and then the paperless kind of layer based on eKYC or e-signatures, digital lockers, and so on. And then the cashless layer, when we say that AMPS or AEPS, Aadhaar bridge is just supposed to be known as later, and then the UPI, BMAPs, and all the ones that subsequently was rolled out. And then the consent-based layer, what we come to be called as the aggregator model, based on that MIT's open source, personal data store concept, which is, getting slowly popular. So all these layers of what we call the tech layers of presenceless, paperless, cashless and consentless layers. And given the kind of a grounding in India for banking to, move to take it beyond the realm of only the, the upper echelons to even the rural hinterland and to the unbanked population, and also to the existing mass, maybe to serve them at a far cheaper level, meaning with huge cost advantages. So when this entire stack was getting rolled out, and people due to necessity induced by the pandemic, or before that the Notbandi issues. So all this forced people to go for a lot of presenceless layers or paperless layers, and come to digital mode of transacting. Today, India is almost 80% a cashless economy, and the way things are moving, it is becoming clear to the bankers that slowly a lot of the processes or operations concerning banking, which was hitherto was in the footage of banking per se, is moving out, and a lot of fintech players or techfin players have all come into the realm of activity, slowly making it a very, very tough field, wherein it is not necessary for a banker to do all the processes themselves. Today you have an opportunity that fintech, is more capable of doing a EKYC, or, vet the documents, or do a credit check and so on and so forth. So, or even do a collection function. So in which part of fintech, it's a big value chain and big set of processes, and even loosely earlier also we had, things like outsourced activities being done. But then now things are that it is far more getting, tech driven, and there could be an option of, more of unbundling. To just draw a corollary to, other sectors like power sector, or, energy sector, where, the power companies are very, they don't do the entire value chain. The power generation company does only that. Distribution company does only that. Power trading company does only that. Collection does only that, isn't it? So somewhere it is an unbundled kind of sector. But banking was never an unbundled sector for obvious reasons, including regulatory, nuances involved in that. But slowly it is getting unbundled, and you are seeing a whole lot of pulls and pressures from the innovations that are taking place, majorly driven by tech fins and fintechs. So this is in short the theme of the today's discussion, just to make people who what is this jargon called unbundling of banking. So I mean, obviously the panelists would know that. So I was trying to explain you to the uninitiated into the team, especially the lot of bankers friends who are connected on this call. So now, having said that, I'll take the first question to Mr. Sunny George, since he has a wealth of experience in the banking space. I thought I'll start with him, and sir, just give a sense of your, account as to how slowly, like, we say you are a banker and also know how implementations of software takes place in banking. Just like how software as a service has become a, in thing today. Banking as a service in the unbundled era is slowly becoming the commonplace. Or, the way tech fins and fintechs are pushing the envelope. We tend to believe that many of the processes that are getting handled might slowly, be it on due diligence, be it on servicing, be it on collections, KYC, you name it, might slowly go out of it, and the platform part of it of banking will still survive, and there will be a lot of other go betweens, unless otherwise we collaborate and cooperate. The kind of unbundling stories seem to be very relevant in the current context. How do you see this whole thing evolving, sir?
So thank you, Professor Kumar. At the outset, I would just like to, for anyone who is associated with the IT industry, has definitely heard about something that's happening today, which is being called the Great Resignation. Okay, so this is the stress and the angst being faced by IT companies in terms of large number of employees deciding to leave for better opportunities or higher wages or higher pay packets. Something similar is happening in the banking industry, from the financial services industry, and it's being called, and I'm very happy that you chose such a topical subject, it's being called the Great Unbundling. Okay, so essentially what's happening is, it is a change in management jargon from an integrated value chain to a modular value chain. Okay, so very quickly, briefly, I'll take an example from the automotive industry. So traditional companies, they focus on one particular attribute, which is called a primary attribute. Like, for example, a capacity of a car to go at a very high speed. And they specialize in that, and they build an entire industry around it. Okay, this is known as an integrated value chain. But after some time, other players in the market, Christensen referred to as disruptive innovation, other players will realize that customers want something more. So they identify what are known as secondary attributes. It could be something like fuel efficiency, or it could be something like, say, safety. Like, everyone is concerned about safety today. So these disruptors, they focus on the secondary attributes and build a new business, a totally new business. What happens to and these new businesses are generally built around a modular value chain. Okay, now I'll explain a modular value chain very quickly, again from an automotive perspective. Some of the top cars being made by companies today are not manufactured by them. For example, one of the leading SUV brands, they have the engine from Fiat or Jeep, and the automatic transmission from Hyundai. Okay, the chassis belongs to the original company. So they are building, they're essentially playing on a modular market. The same thing is happening to the financial industry. Okay, traditionally you had banks which believed that, and for them it was the primary attribute, the physical presence and the traditional products. Okay, and they were very happy with that. They have achieved a large amount of success in terms of revenue and profit, and in terms of customer retention. But today what is happening is, customer wants more choice. In fact, the customers are no longer banking only with one particular bank. They may go to one bank for a housing loan, they may go to somebody else for a car loan. Their current account or SB account would be with some other bank. So they are going across across the whole market for that. If a bank is to survive today, you have to have partners who can give you these modules, or this, in which they are specialized for giving a better range of products to the customer. So in that context, that exactly is what is happening in terms of unbundling. So basically, no bank can give everything that a customer requires in one place. Essentially, so the bank is moving from a branch model to a platform model. Okay, so you mentioned about platform. So in a platform, what happens? Anyone can connect using APIs, which have actually brought down the cost and complexity of integrating with another person, another partner, and they can connect on your platform and provide any service. So you will have somebody giving you KYC service, somebody will be doing digital lending products for you, somebody will be doing data analytics, somebody else may be doing some other factors. So this is the way the world is moving, and generally this is the way forward. So I think we have to welcome the great unbundling for the banking industry.
Thank you for putting a lot of clarity on how the whole space is evolving. Now, I would like to bring in Mr. Arun, since Arun has a wealth of experience of working in the credit side of the fintech story. He was also the CEO of a fintech company till now, and right now also the RAIN wherein it's a US-based fintech. I gather that, the payday loans and stuff like that.
So early wage concept.
Yeah, early wage
EW,
concept. And
that's
so,
what we call.
so he has a lot of experience in that. So now I would want to understand more, from the fintech perspective, now that we have talked about the platform part, for the benefit of the larger audience tuned in, which I find is touching close to 100, and we are also live streaming it, and I am sure that, the Facebook and YouTube pages of SBI also we are live. For the purpose of the larger audience, on the theme of unbundling, especially from more of the credit related unbundling that is taking place. We all know that when the kind of stack that we talked about, a lot of democratization of data has happened, be it on the GSTN or the ITR or acrylic, a lot of CIBIL scores. So you have a credit bureau and a lot of data, troves of data available in the platform to make sense of the importance that was getting attached to a balance sheet or a salary certificate is slowly getting passe, or it is in terms of weightage, it is getting weighted much less. And whereas you are into profiling so many other things, including the social media profiles, where have you defaulted, and so on and so forth. uh, just want to understand from you, be it from the KYC part of it or the various credit processes involved, how do you score somebody before taking a credit decisions? And, many of this where the fintechs have disrupted in this whole value chain, and how this unbundling story as far as credit is concerned is getting pushed. Now, both from the fintech and if possible, from the tech fin point of view also. Over to you, Mr.
So thank you, and first of all, welcome everyone, and thanks. Good morning to all of you here and everybody who's listening. I'm Professor. You're very right that there is a lot of let's say buzz around this whole credit piece, and in the morning when we were having our breakfast, Mr. George did mention that as bankers, their basic this thing is to listen to the customer, and while talking to the customer, evaluate whether you can give a loan to the customer or not, right? Whether it's a housing loan and or whether it's a car loan or maybe a personal loan and all of that. While I do agree to that, right, there is nothing which is which, let's say, alternates to the feel of the customer. But look, it's very, very subjective, right? I may be very good in it, or I may be very bad in it, right? So what has happened is, over a period of time, the use of data that you get, right, whether it is the data of the customers, which is his credit history. In fact, I would say the whole bureau industry is probably one of the first fintechs, right, to be able to make the entire my bank account, where I have defaulted, what all loans I have taken, what has been, in fact, if I've taken a loan for, say, a housing loan for, say, 12 years, the entire 12-year record is there, right? So then the underlying, point is that if I have not defaulted for 12 years, I'll not default for at least for the next 1 year or so. So those points become very, very important, right? Also, there is other information that comes, where does the customer stay, how many, let's say, how many times he has approached any other lender for a loan, and so on and so forth. So all these data points are used, right? Along with this, there are data points which come from, say, assessing his mobile in terms of consistency, right? Is his phone number the same that he's applying? Is it different, right? Is it social media handles, does he have the same phone number and the same email addresses, right? If the customer typically has, say, 10 email addresses in 10 different platforms, from a risk perspective, I'm sure even Mr. George would say that this person doesn't seem to be very consistent in his approach. Therefore, from a risk weightage perspective, probably assign him a slightly larger weightage, higher risk, versus a person who has one mail ID across 10 platforms. So it would be lower risk from a consistency perspective. So, so what what data allows us, right, is to really objectively evaluate a customer, right, and maybe score him, right, and then based on that score, give him the products, right. What is also happening is that you're risk assessing the customer and also, doing a cost benefit analysis. And some customers who are, as a banker or as, lenders, you think are better risk, you offer them better rates. People who you think are higher risk, you offer them lesser or maybe higher rates.
The
right?
risk premiums
So
are
the
there.
risk premiums are there. In fact, I think State Bank of India has also recently started that, right? So if you have to do that, then you have to have it. So basically, data is helping a lot of these things, and a lot of these is now available on the go. Just to add one more point here, we did speak of bureau, right? There is also bank account data which is available on the go, right? So customer can upload the statements, and you can analyze the bank statements on the go. You can see things like what is his average bank balance over the, let's say, last 3 years, how much salary he's getting, what are cash advances, how many ATM withdrawals he's done, are there any fraud transactions and stuff like that, right? So this also helps you to risk assess the customer on the go. So, yeah. So of course.
Good. So I guess the tuned in participants are getting a feel of, how the whole discussion is proceeding. And I would welcome a lot of questions in the chat also. We are keeping a tab on that as well. And I would also be flagging of questions to the panelists based on at the registration stage itself. We have, taken a whole lot of questions. So that Excel sheet is also open in front of me. So we'll be flagging a few questions on that as well. So now I would like to, bring in Mr. D. Ramanathan, who's the director with Way to Wealth. Now, just now we were discussing from Mr. Arun the way he was responding on the credit bureau and how the fintechs are disrupting the credit space. You know that, when we, in short, wealth management is a slightly bigger jargon for the lesser initiated into it. Basically, we are referring about mutual funds or investing and so on and so forth to create wealth. So, the US of the world runs a investment banking license concept wherein, the amount of money they play with are much more than what the bankers play with. Right. So many may not know that the banking system, India is a bank dominated financial system, whereas US is the capital market dominated, investment bank dominated, or even insurance dominated system. Right. Banks come only third in the total, quantum that they handle. Just to give a sense of how, if you could give a sense of how this whole unbundling is taking place in the space of wealth management, or as we was a more rudimentary way of putting it, how the whole funds management or mutual funds are getting managed. Today India has so many fund houses, plethora of schemes. You get lost, isn't it? And within these schemes, again, you have a lot of thematic variety, debt funds, equity, balance, and so on and so forth. Right. And bankers keep peddling, isn't it, as part of their commission structures and so on and so forth of non-interest income. So somewhere along, the wealth management part or investment part is also heavily disrupted with the unbundling taking place. It is not that, we sign up a lot of forms to sell, put an SIP or, withdraw some money through SWP. So it is all done through apps now. Right. And you have been, in the whole wealth management space for long, including the company that where you were working. If you could put a sense on how this whole unbundling has happened, including the disruption by the fintechs and so on and so forth, right, in the wealth management space.
Yeah, I think that's a very interesting question. I think I must really thank, two things that has helped evolve for fintech to get into wealth management big time. One is your smartphone penetration and internet penetration. I think without which I don't think any fintechs would have evolved what they are today. Whether you are into wealth management, whether you're into digital lending, or whether you are into insurtech, it is the sum and substance is the internet penetration and smartphone penetration. I'll tell you why fintechs have gained a lot of dominance in the wealth management space. I think the biggest challenge for any customer today, is you need to have your KYC done. I think that's the starting point for any investment. Even if you want to purchase a fixed deposits, you need to be KYC compliant. So what we have done is we have simplified the KYC process, thanks to Aadhaar. I was telling this to Arun some time back and to Sir also. See, today you don't need to fill up any form. You don't need to upload any documents. All that you have to do is, type your Aadhaar number. The entire process happens on its own. It's completely OTP generated. Your documents are fetched from the DigiLocker, and again you authenticate it through OTP. And I can tell you, in less than a minute, you can complete your KYC. Good old days, it used to take at least a week to 10 days time, right? Because you need to fill up a form, you have to put your photograph, you need to sign, you have to attach the relevant documents, then reach it out to one of the registrars, then it might take probably a week to 10 days time. So we have simplified the entire KYC process. So giving the customer, the superior experience is what is today making, fintech or whether, I'm saying whichever business that you are in is making life much more easier. The reason why you are seeing higher degree of adoption by the customers, and more so the millennials. I keep reiterating that in all my discussions is, see, they are our biggest consumers. They are the people who have high disposable income. They are in that 25, 30s. They have another 30 years, work life. It is they who are going to consume majority of our products and services as we move forward, right? They are going to keep getting increments every year. They keep getting bonuses every year. And today, let me tell you, these guys are highly aspirational. The question is, are we offering products and services aligning their aspiration? Otherwise, they are not going to associate with us. So therefore, it is about continuously offering products and services matching their aspiration, and which Arun also touched upon in terms of data analytics. I think they throw enormous intelligence. You can, from there you can figure out who is more likely to consume a particular product or service during the particular period, and probably offering products and services which are based on their life stage. Suppose who is in that 25, 30, he wants to build, let's say, a retirement planning, right? You need to offer a solution which will match that. So the entire proposition has moved from a product approach to a solution based approach. This is one of the reasons why today, especially the fintech which are in the wealth management trend has been able to make a significant difference to the consumer. And today customer is actually has multiple options to choose. It's about how do you simplify that. In fact, I am one of the biggest proponents of goal-based investing. Right? If you are investing, you need to have a clear idea of what is the objective of investing. Let's say if somebody says, I want to park it for emergency funding. So you need to offer only that product which will match, the requirement of the customer, right? So that is one of the reasons why, wealth techs have been gaining significant amount of prominence. And today, some of the big fintechs with less than 7, 8 of being in the system, they are all valued in billions of dollars. So the customer experience is going to be the key differentiator going forward, because products and services, they have become almost commoditized, and it's easy to replicate something, right? If you're offering something, it's easy for a competition to copy that. But what is that will differentiate you on a sustainable basis is your superior customer experience. So that's where I come from.
Thank you, Mr. Ramanathan, to put it lucidly in the wealth management concept, especially goal-based investing and such other things which you said. We talk about financial well-being. So in short, the wealth management has to learn a whole lot of things from the theme of financial well-being too. Coming back to Mr. Sonny George. I guess the participants who are tuned in are getting a sense of how our discussion is going. I was trying to ping pong and understand the banking per se, how fintechs are disrupting from the credit side, from wealth management side, and so on. Right. So now let me take it slightly far. Ultimately, many of these models, including the use of technology, are to benefit the uncovered part of the banking masses. So the incremental amount that's we spend to reach out and get people who are unbanked has been phenomenal earlier. That itself was a failure, and we couldn't give one bank account to each of the each of the Indians, to the level perhaps one SIM card is available to each of Indians. Within about 20 years of telecom liberalization, the banking liberalization could not give that, and even with all those Jandan account, JDY, Trinity, and all that. But we are very much on course towards that. And if you look at the 2014 Nishikatmore committee report, very clearly Nishikatmore committee report argues that we need to pursue a differentiated model too, along with the normal commercial banking systems and cooperative banking systems that all the country has. And that gave rise to the formation of payment banks and small finance banks in India. And in the recent 2022 budget, you saw how the digital banking units, DBUs, and DBUs, 75 DBUs in 75 districts. So even the number is there if you look at the document, budget document. So so all this space is actually evolving to get to the bottom of the pyramid in terms of financial inclusion. So when we are talking about disrupting the whole environment and including bringing in the unbanked into the banking network from the clutches of money lenders or other high cost lending or to which they were attached to, there is a whole lot of things that gets done to be a success in this. And somewhere along, it is typical of even not just the unbanked, even for example, the MSME story. So MSME's requirements are to a tune of 25 trillion in terms of INR, is an estimate recently propounded. And so much opportunities there to, service these unbanked segments repeatedly. So how the whole unbundling is helping that space? If you could put more sense on that.
Yeah, Professor Kumar, you actually hit the nail on the head. Unbundling is not a rich world phenomenon. It's definitely not. In fact, a lot of startups in developing markets are doing a lot of work in creating new solutions for the underbanked, okay, or the underfinanced or the underserved. Now, this has to be understood across 4 dimensions. The first is cost. They can bring a lot of value, these startups, and in terms of cost of any service that we give, like in terms of the charges that we levy on them, the user fees, okay. Also, the type of equipment that they need, like they're doing a lot of work on how can they access these services without the sort of connectivity that we are used to, okay, without the high-end devices that we are used to. So that is the cost aspect. The second is the access, okay. Can we make this available to every end user in a way that he understands, or better access to the end user, okay? And how can we design these solutions in which even the underserved or the person in a rural area can also use this thing, okay? And then
it includes an app in the regional language.
Yeah, exactly.
Also,
yes, that is right.
The gadgetry that involves the business correspondent to go into the deeper pockets need to have the regional connect as well. Yeah.
And the third dimension that we need to look at is the fit.
Yeah.
Are we able to give him the product that he needs actually? Okay, not something that we are used to. Okay, because his requirement will be totally different. His requirements,
maybe he's comfortable to pay.
His level of comfort will be totally
on
different.
A daily basis.
Exactly. So EMIs may not work. Maybe you need EDIs. Okay. So that exactly is something that. So are we designing? So they can help a lot. These startups can help a lot in actually making the fit of the product more relevant to the bottom of pyramid customer. And the last part is the experience. What sort of experience are we giving him? Okay, not only on the app. It may not be necessarily only on the app, but it could be also an omni-channel presence, a point of presence. Okay, does he have to fill out a lot of forms? Okay, can we use some of the demographic data that is available through various channels to pre-fill his forms? Okay, so a lot of work is happening there by us and these startups. Then the user experience that is given to him cannot be the same that is given to a customer in a say an urban or a metro background. So these are the four dimensions across which a lot of work is happening. So cost, access, fit, and experience. And there, the startups and all the players have a very big role to play.
Thank you.
Can I add to
Yeah, please,
what
please. Yeah.
Sir is saying? I mean, you did mention about the fit, right? And I've worked in a company where we were providing microloans, and I'm still, even at RAIN, we provide small bite-sized loans which are to be repaid in 15 days at the next salary cycle. Initially, I thought that, there will be no takers for a loan of 4,000-5,000 rupees, right? That's typically the amount you spend out on a dinner or, what is it? Our biggest use case was the Zomato guy. His bike, he uses his bike to actually deliver, right? Yes. So his bike failing off, from where does he get money to repair his bike? And if he doesn't repair the bike, he's not earning because he can't then deliver. So all he needs is that 2,000 rupees. And in 3 days, he's able to pay it back because then his, the cycle starts. So is there a product which can give him 2,000 rupees at whatever nominal, but convenience for him to get that 2,000 rupees and paying back in 3 days? Is there a use case? I think there is a very big use case. And, a lot of fintechs have actually evolved a lot of products around that. Small case in wealth management is a very good example of a company, or Zero is a very good example of a company which, you could actually make the whole process of investing very, very simple. So completely agree with you.
Yeah, actually, there is a lot of scope, Mr. Ajmera, for greater customization to different contexts, user needs, and perspectives. That's what you were talking about.
Absolutely.
A Zomato user, a driver, or a delivery person may not be our typical customer, but if you are able to understand his specific requirements, his context, his preferences, then it's much more easy to. And that is possible only in a modular sort of delivery.
Absolutely.
It cannot be done in a one size fits all.
Absolutely. And look, the way you, let's say from a cost benefit perspective, the way you look at these customers also have to be different.
Yes.
If you are able to provide services to them in a very convenient way, believe me, more often than not, they'll come back to you for the second loan. They'll come back to you for some FD investment. They'll come back to you because you are choice. And look, your app is there on his phone, right? You're already part of his life by your app being there, right? So completely agree. So, you can keep on adding products, services, solutions, around that and grow this customer from, say, just giving a 2,000 rupee loan to in 3 years to taking his 2,000 rupee SIP investment.
Yes.
Rightly said. I think there is enough depth and width.
Absolutely.
I think it's about identifying the right customer segment and offering the relevant products and services in a manner that he or she will be able to consume it seamlessly. I think that is what is going to,
I think completely, and I'm sorry, but I think the overriding point that, sir, you said is about access and convenience.
Yes.
Yeah.
Absolutely.
So, I mean,
sorry.
No, please. I mean, good that, you could throw a lot more light into it. So I am trying to, go deeper into the theme, especially on the credit side of it. Now that we are talking about it, how the fintech way of disrupting the end-to-end customer journey. Okay, so I mean, Mr. Ramanathan was talking about, both of them were talking about the experiences. So ultimately, when you're talking about the end customer journey, experiences matter. Yeah. And if you could take us through, how typically, since most of the people on call are bankers themselves, they are used to a certain stage of sourcing, then the pre-sanction, post-sanction, disbursement, repayment, accounts getting serviced, collections, and so on. How fintechs, have disrupted this whole value chain, and who are all the kind of players, and what are the ways by which this whole unbundling is happening in each of these, segments like pre-sanction, sanctions, disbursement, collection, so on. If you could throw some more light on it.
No, thank you. I think sir would be.
I'm asking you, sir is a traditional banker, you are a fintechian, so I want it from you.
Yeah, look, from a lending perspective, right? Typically, there are 5-6 stages, right? You acquire a customer, you take his application, you assess his application, you do his KYC, you risk assess him, you disburse the loan, right? And then you do loan servicing. And if the customer has paid, very good, right? Maybe give him another loan or whatever. If he's not, then you have to follow it up for collections and all of that, right? So there are these 5-6 steps, right? I used to work in Citibank for some time in auto loans. I remember we used to send files for approval, with bank statements and, highlighting where the customer has paid, defaulted and all that, right? But today, all of this happens real time, right? So how you acquire a customer, you do digital marketing through various channels, right? You have performance marketing, you have Facebook, for example. Google is a great example. You have your own site, you have your own apps where customer can download, apply from
to
that.
drive business,
To drive
including
business, right?
the Paisa.coms of the world.
I believe Yono is one of the best from that perspective, right? You download the app, you get in all the information of the app. The app itself can, you can get, let's say you get the mobile number, you buy an OTP on that number, you verify the number. So the customer is verified, right? You take the email, you can send an email OTP to verify email, but these typically depends on the processes you want. You can take his Aadhaar number, get the KYC data backend from UIDI. The UIDI will send an OTP to the customer if his mobile is linked. He puts in the OTP, the entire details come. So you match his name, you match his address, you match his image. You can ask customer to take an image, a selfie. Today you have the technology developed to the extent that, even selfie can be tested on the liveliness question.
Yes.
So the camera will actually wait. You think that it is taking, but wait for you to blink or move your head. So, and then take the photo. So you know that, it's not a dead photo or it's not, an image of another photo, for example, right? So you do that. So you've assessed the customer, you've KYC'd the customer, you've understood who the customer is. You can even take a biometric print and, all of that can be done, right?
Geotagging is also.
Geotagging, so like from an AML perspective, you don't want customer to be outside the geographic territory, right? You can't, let's say, lend to a non-Indian. I'm sure Nepalis cannot lend to outside in Nepal. So through geotagging, you will know where the customer is applying for. He's applying for India to a Nepalese loan. You can, stop it there and then itself, right? So you've done 3-4 steps, immediately. Then you have a lot of data. So you can get data for risk from various sources. Today you have bureau, so you have financial information, right? Which is his bank statement and all of that. We also have non-financial credit scoring models, which really rely on the social imprint of the customer, right? What is his SMS, all of that. So a lot of data available there, right? As a bank or as lender, you will have to choose what kind of data for what kind of loan. So if you are given maybe a longer term or a higher amount of loan, or maybe, say a personal loan of say 10 lakh rupees, then you obviously need more information. But if you're giving a 10,000 rupee loan, then obviously you need less information, right? So then, then you can work the processes accordingly, right? Disbursal of the loan. In fact, before disbursal, signing of the agreement, which is so very critical, right? So agreement can be signed through an OTP, which is now allowed. Aadhaar OTP is now even allowed by our Reserve Bank of India, right? So you can capture the IP address, you can capture the OTP in the agreement and send him a copy of the agreement before, immediately after the thing. You send a sanction letter or show him on the app that, this is the amount, these are the terms and conditions of the loan. He clicks and through IMPS disburse the money in say 7 seconds. Anywhere in the country. So with app, you don't have a geographical limit, right? Earlier in a branch, customer had to walk into a branch or the banker had to go, whichever way. But there had to be a physical interface. App is your physical interface. App can be downloaded anywhere, from Kashmir to Kanyakumari, even in Maldives, and you can still do the loan there, right? So app really makes, things much, much more easier. Penetration of internet, smartphone, all of that, right? So with this kind of thing, so once you've got the customer, risk assessed him, done all the 4 steps, disbursal is automatic. I remember at our times, disbursal itself, even after the agreement was done, disbursals used to take 3 days. Because agreement need to be written, some system terms and conditions need to be this, checks need to be printed, physically couriered. All that is not there, right? So it's a real time, transfer of money, and it happens in matter of seconds. Post the disbursal, right? You can send all the information of the loan to the customer automatically. Customer in his app would know his statement of account, how many EMIs he has paid, how many is pending. You can send alerts on the next repayment date. You can send payment links. You can have in-app payment links, which is there. So he goes to in your app, there is, he presses the button, it takes him to a payment gateway. He just, pays his EMI. So much more easier. True. So much more easier and convenient for the customer. And these really help in collecting, because customers, more or less, most of the customers want to pay. And the convenience of payment actually increases your collection rates, right? And if he's not paid, then you can constantly remind him by way of SMSs, WhatsApp, email, what you have. Digital calling, you have IVR broadcasts now, right? So I'm sure most of you must have heard of, some call from the bank, which is an automated call to say that you are approved, pre-approved for a loan or for a credit card. Now, same thing can be used for collection, that, you have missed this EMI and, your next due date is so much. Customer is aware, right? And if he defaults, doesn't go, then, you can follow up on digital channels. So it's, the complete thing. At the back of it is data. At the back of it is connectivity with several players. So KYC is through another fintech, which is providing you, we say, regulatory tech services, right? So KYC solutions, the bridge between, say, UIDI and your app. Payment is through another fintech, which is in payment space, which is providing you payment gateways, right? So all of that. So it's not really one fintech. It's, let's say, an ecosystem of say 5-6 fintechs coming together and all of that.
It's a fantastic value chain.
Yeah, I would just like to supplement there. Like even after the loan is given, there's a lot of learning in this process, because you're giving this loan based on a model.
Absolutely.
A data model which may be analyzing 100 points, or if it's a more sophisticated company, maybe around 200, 300 points also. But what happens, no matter how well you design a model, there will always be some outliers that happen. And if you analyze 6 months down the line or 1 year down the line, which of these accounts that you have, your model said are good to give, have actually gone bad, and the reasons for that, you will find there's a whole iterative process that you can build of rectifying your model or tweaking your model so that your the lending process becomes less NPA averse.
Absolutely.
And that is the reason why digital models have such low levels of delinquency.
In fact, SBI's pre-approved personal loan is a good standing point.
Absolutely. So you really said it, and right. And in fact, a good scoring model really takes the data of your DPD customers, right from acquisition to defaults, and the whole data is then analyzed to really come out with your absolutely.
Just to add on, I thought I'll flag one question. It's, I think, asked by one of the SBI's DGMs, Mr. Sudhakar. He's asking, in the present digital era, the way banking is conducted is also metamorphosing in many ways and very fast. According to you, what would be the structure of banking operations by 2030 in India, with specific reference to systems, processes, organization structure, innovation, etc.? And he also says, in fact, the second part of the question is far more, relevant here. In India, where agriculture is still backbone and major activities of the peoples, including senior citizens, occupation of unorganized sector, how these fintech companies can become alternative of the present banking system. So, what will be your?
I would defer the first part of the question to sir. I think
so. I'll take the first part. Yeah. So if you want to know where banking is headed, let's go to another example. Let's go to the Amazon example. They do not manufacture any product that is sold on their platform.
Yes.
Isn't it?
Totally unbundled.
Totally unbundled. Okay. Yeah. Please. They work on, primarily they work on the huge amount of customer data they have.
Correct.
Okay.
Yes.
That is visible in customers like you bought this.
Correct.
or somebody looking at this is also looking at that.
Yes.
That sort of recommendations. Okay. The third point is the scale at which they deliver, the
Yes.
scale and speed.
Yes.
Okay, these are the scale and speed of delivery is something that really helps them in customer retention and actually ensures a lot of customer delight. So let's transpose this into a banking scenario. Do we really need to manufacture everything that we sell? Those days are over. You have to shift to a platform model where different partners, whether they are startups or tech fins or fintechs, or maybe established companies also who are specialized in that area, who have a lot of competence in that area or core competence in that area, could actually help you to provide some of the services. Okay. And it could be the other way around also. You could be offering banking as a service on somebody else's platform. Like suppose you have a major industrial house who's come out with a super app and they don't have a banking license. They would like to offer some of the banking products on their application. So there is a scope. This is the way I think at least 10 to 20 years later, or very soon, maybe even before that this is the direction in which banking is going to go.
It's going to be a collaborative model.
Exactly.
Right. We need to collaborate and coexist.
In fact, if I can add to that, and taking from your earlier example of, no, even the earlier one of auto, the company using the engine of, Hyundai and, that. Maybe one bank would use payment gateway of another bank.
Yes.
What is stopping?
Absolutely. So that's the whole modular value chain concept.
Yeah. So the way the tech enhancements is pushing this envelope is all there to see, and when we are talking about the collaborative part of leadership, especially since Mr. Ramanathan comes from wealth management, this one. There has to be a kind of a winnability and a win-win situation for both. The so-called fintech or tech funds on the one side and the bankers or financial institutions or whatever, on the other side. And somewhere along, when capital markets are at a state of flux now, and markets are falling like there is no tomorrow and stuff like that. So how do you still find, get traction to many of these things, especially at a time when return of capital is more important than return on capital. Right? So how is this winnability situation getting cracked? And, theoretically speaking, collaboration is fine, but then how do you get people on board? When the markets are on zooming, there may be many, but now, how the whole thing happens.
I think it's a very interesting question. This is what every common investor actually thinks, actually. What is very interesting to note here is in the last, even if you take a year, there are multiple occasions where the foreign institutional investors were net sellers, whereas domestic investors were net buyers.
I'm not going to that, but I'm asking.
No, I'm just saying. So there is a lot of stability that is coming from retail investors.
You mean to say that you need to look at long term and go for products?
No, I'm saying the market has not corrected as much as it used to be in the past. I'm saying there is a lot of stability that is happening today because of huge retail participation. Whether they participate directly in the stock markets by buying stocks themselves, or coming through the mutual fund route, or coming through the insurance route, or coming through the NPS route. Today, NPS also has multiple variants. One such variant is where you are allowed to invest in equity oriented schemes, and these are typically 10, 15, 20 years, right? So the stability comes by design. So I'm just trying to address you are worried about the volatility part. I thought I'll address that part. I think
you can also extend the question to cover any tech enhancements of how fintechs are. There is a question of educating the mass also, right? Capital market is not a place to go to for a everyday profit. Equity, as we all know, as an asset class, performs over time, longer time.
Absolutely.
So, where come, do you do all those educative part or financial literacy part also?
Of course, education is part of the, what to say, is part of the process.
Okay.
For example, as I was telling when we started the discussion, the approach is solution-based approach.
Okay.
See, good old days, people used to come and sell a particular product. I've seen, and I'm saying 10, 15, 20 years back, people used to push insurance policies. So today, the customer will start resisting. So you'll have to go based on the need. So today, a lot of such platforms, which earlier used to be a one-on-one, those solutions are being offered digital. Like typically, the customer, we do a basic risk profile.
Okay.
So therefore, you understand what is the risk tolerance of this particular customer.
The goal orientation.
Then tell him what is it you want to do, what is the objective of your investing. Then accordingly, showcase those products and services which will match his risk tolerance.
Okay.
So it is more a customized solution than trying to sell a particular product or a product push, because there is no one size that fits all.
True.
So that's where there is huge winnability, and especially I have seen a lot of banks and fintechs coming together in the last 5-7 years. I have done it myself. See, for a bank, just to take some cue from what Mr. Sunny George mentioned, you can't do everything yourself. So the biggest advantage today a fintech brings on the table is three things: agility, tech prowess, domain expertise. Banks, no match in terms of credibility. I think that I keep reiterating there. Second is you have huge customer outreach, right? The third is the distribution strength. Okay. The question is, when we come together, that's where there's winnability.
Good. Well said. Thank you, Mr. Ramnathan. And I thought now I'll take the question to Mr. Sunny George. When we are talking about this whole thing of unbundling, now we have understood to what extent technology plays a part. We also knew to engage, you require apps and super apps and all that. Somewhere along, that's going to be a lot of app driven. Everybody is after super apps.
Yes.
So whether it is Yono or Pace app or PNB One, Indonesia, there are a whole lot of them, right? Yeah, Bob World. So, and Tata Neu. It's not that necessary that only banks need to come out with super apps. There are a lot of financial services, NBFCs are also coming out with it. So this being the thing, but it's also true that the way the UPI could scale up, the magic it could do for India, especially. I don't know whether it was sort of fait accompli of a pandemic that made people graduate towards it, or on their own volition of the cheaper alternative to as an very cost-free kind of a payment mechanism. Now, there is a whole lot of interest in coming out with these kind of innovations even to other countries. NPCIs are getting talked in other markets like Nepal or even Africa. And, everybody is trying to work on such models, build such stacks. What is your take on the way that the APIs will run going forward in many of these platforms, as well as the whole, if you could throw more light on the super app and how this whole thing will evolve?
So you mentioned the UPI. Okay. So it's part of the India stack. In fact, we are at a very interesting period in our history where actually this technological these developments are actually part of the technology revolution itself. Okay, they are not part. They are actually the technology revolution. Okay, if you look at the whole India stack, whether it's UPI for payments, or Aadhaar for identification, okay, the DigiLocker for storing of documents, okay, the 5-member, the eKYC, the e-sign, the entire all of these things together are actually like the TCP/IP protocol. Okay, it runs very silently in the background.
Okay.
Just like the TCP/IP protocol connects your phone or your laptop to the physical internet. Okay, these components of India stack actually give so many services which can be used silently in the background, like you were talking about eKYC for a wealth customer. Okay, the same thing would also work in a rural place for onboarding for an MFI customer. So the whole thing is now revolving around this. Silently, it has become part of the whole revolution that we are seeing happening all around us. Okay, and this is a way enabling service delivery on a scale which has never happened before. It is helping us to revolutionize user experience. Like if you go 10 years back and were asked to fill up an account opening form, you have to start with your whether your salutation is Mr., Mrs. or Miss. Okay, your name, your district, your PIN code. Okay, so many items of demographic information which today just at a snap of a second is pulled from the UIDA database and it is populated into the form. So to that extent, the whole, whether even the UPI part of obviously is one of the most critical parts among this, because it has revolutionized the way payments are happening.
Yes.
Okay, and the interesting thing is what we have done in India has not been even done by developed countries across the world. They are catching up with us. They are playing, they are playing catch up now. They don't have an Aadhaar. Many of the countries don't have this sort of Aadhaar system. Okay, they have not gone in for a DigiLocker or any of these components that we talk about. So they are not able to give the sort of technology products that we are able to offer in our country. That would be my view on this.
We are ahead of the curve.
Definitely.
And Professor, the real-time payment thing, or the IMPS, actually started in Africa. Right?
Yes.
M-Pesa, right?
Yeah,
so
M-Pesa.
it was a need there, and we actually took it and innovated around it so much.
True. Yeah, so much positive happening, in the space of fintechs, the way it is disrupting and also the unbundling that you're seeing. But there has also been a lot of wrath when it comes to the regulatory. And so, for all the right reasons or wrong reasons, regulator, whether it is tech funds or fintechs, are many times trying to do a catch-up game. When banks like Ease of Bank comes to RBI and says that we have tied up with X or Y finance company or a fintech or a tech fin like a Google Pay or Amazon Pay and say that we are going to open FDs, then the RBIs of the world are still not able to understand how the whole thing needs to be processed. Like there is, a kind of, when especially the tech fin, the managing the tech fins who don't perhaps have the servers in India and so on and so forth. There's a whole lot of issues involved, not an easy explanation. And it is also true that maybe, when you look at from the bank chiefs or bankers, they say that the stack was there, the KYC part is bulwark is given to me, whereas fintechs is all taking the cream. So as a fintech, both of you, how do you, explain it or how you are seeing that? Tomorrow, if there were to be strictures from the Reserve Bank side, of putting, no, if you bring the business, KYC should be your responsibility, not banks. Now, some such, tweaks were to happen. What will be the whole, future of fintech?
Let me
future of
start actually.
unbundling, so on and so
See,
forth.
there is no compromise when it comes to regulation.
Okay.
See, I think that's like given whatever business that you are into, whether you're into banking, whether you're an NBFC, whether you are a mutual fund or insurance company, whatnot. See, there is certain when the platform companies, the fintech companies partner with a manufacturer, you get into certain kind of understanding, like what I will do and what the manufacturer will do. For example, there are cases where the platform says that I will do the KYC and populate those details to you. That is option one.
Yes,
So
and
that
SLAs need to capture all this.
so the entire details are pushed through API to the manufacturer, right? So it becomes easy. You don't need to do KYC once again.
Okay.
The second piece is, for example, penny verification. Like good old days, people used to take the cancel check leaf or upload the bank statement. Today, like that's gone, right? There are service provider who does penny verification. In my view, there can't be a better authentication than penny verification. Right? The name, everything is matching today, right? So the third is what do we offer to them? Like, when we partner with any manufacturer, as I said, there are few do's and don'ts. Like we say, we do set of things like I do KYC, I do penny verification, I take all these and I auto-populate back to you. Like, and based on fulfillment of certain requirements, the product gets processed. So that is how it works. So, or the option is I just provide a platform for all the manufacturer to display their products and services, right? With a single sign-in, then you go to the respective manufacturer, buy what you want to do, then the entire onus goes on to the manufacturer. So both models coexist. So there is no way that one can, get away with the regulation. Like, no.
Okay. Yeah. Your take, Mr. Arun, especially I thought I'll flag one question also that is there in the panel. Governing authorities penalize, talking about, a case. And finally, he says, kindly highlight how banks can develop cost-effective, customer-friendly and compliance-enriched fintech platforms. What will be the role of bank employees to avoid threatening of reputation?
Yeah. See, from a perspective of fintech and into lending, right? Regulation is definitely welcome, right? And there should be regulation because look, what a regulator is looking for. One, and my understanding is that primarily it's looking to protect interest of the consumers, so that there is no wrong selling, mis-selling, bad use of data, and so on and so forth.
AML and all
data protection guidelines, right? It will also look at the governance structures of the companies which are really giving these kind of services to ensure that they are properly governed and customers are not taken for a ride and all that, right? It will also ensure that there is no regulatory arbitrage.
Yes.
Right. So what you do digitally and what you are doing physically, right? So in physical form, you are taking name, address, everything, but in digitally you are not doing. So you can't, right? So there cannot be any regulatory arbitrage. In fact, Reserve Bank of India, I think one of the first regulators in the world to have a fintech department.
True.
Right?
Very recently they've
come out with they set up a working group on digital lending. True. And the digital lending report is in public today. I mean, can't be more transparent than this. It's a 110-page report which, really lays down the framework and all of that. And my understanding is Reserve Bank of India will come out with certain guidelines in terms of regulating the whole digital lending. Now, and when I say regulation, it won't be only for fintech, right? It is on digital lending. It's also on bank which are doing digital lending, whether on own platform or somebody else's platform. It is on fintech which is doing digital lending, whether as an aggregator or as a loan service provider, on an NBFC, also on a Google which wants to get into lending.
Yes,
so regulation will be same. Also, if you look historically, if I take the example of another industry which is microfinance, if we all remember that many years back there was huge issue around microfinance. RBI set up a committee. They came out with guidelines in terms of microfinance companies, and look where the sector has gone. From nowhere, the sector has reached a stage where the last 3 bank licenses in India were given to microfinance companies.
True.
Bandhan is a very good example, right? Suryodaya is an example. Janlakshmi is a great example, right? NBFCs are now getting banking license. So you see that evolution happening. So I think if the sector gets regulated, right, look, some of the unscrupulous players will go away, right? But the ones who are serious and who have business models and understanding of the market will thrive, and therefore you'll see better solutions to the customer.
So, Professor, I have one question which I wanted to ask our Sunny George.
Yeah.
I've been hearing a lot of it about this buy now, pay later. It's gaining tremendous, traction. What are your quick thoughts? I mean, There can't be a better person than you.
No, it's actually a.
I'll plus one the question.
Okay. So it's actually there has been a transition or a movement on the lending from the app to the purchase,
Yes.
the purchase decision. It's now part of your purchase decision. Okay, I'm oversimplified, but just like you like your whatever you purchase to be put in a bag which is convenient for you, you would also like to have, along with that, you would also like it to be financed. Okay, you're not so much bothered whether it comes from X bank or Y bank, as long as you know you're getting it at a particular rate and which is you feel is reasonable. And you don't want to spend too much of time and effort.
Right.
The customer doesn't want to do that because all lending processes, even digital, needs a conscious decision on part of the action on part of the customer. So we are reducing that. We are making it. Instead of unbundling,
We're bundling.
we are bundling this with the.
You are embedding
purchase
it as
decision.
part of the proposition. Okay.
Okay.
No, somewhere along, like in 2008 time, I don't know whether a subprime is building up, isn't it? So the kind of
We can't say
portfolio.
because the scale is so large.
So, the
So, and mostly they're given to credit card customers or some others, this thing. But anyway, in the context of the earlier question, there is one thing I'd like to bring to the
regarding
table.
the tech
Regarding the
regulation and
risk.
so on. Yeah.
See, when like say not just one bank, but a series of banks or multiple banks rely on one specialized service provider, are we not creating a concentration risk?
Yes.
Concentration risk, systemic risk,
Isn't it?
Yeah.
So this
That
is
I think
also
this has
something.
been flagged in the RBI recent
So this is
report.
something we also need to look at. And if over dependence on some one person could also be, can we have more players so that if the whole risk is spread out and you're not just like if one person fails and everyone is down. So that should not happen.
That's the reason RBI also came out with, alternate to UPI and all of that, right? So that there is no one risk. And I think that's a great example.
Yeah.
So just when we are still, debating various dimensions to the issue, I would also flag off any more questions. We are in the last 10 minutes or so of the discussion. So if any cohorts who are participating, please,
You switch on the mic.
switch on the mic and you can ask your question.
Yeah, myself Arjun Nepal. I'm from Nepal SBIL Bank, Kathmandu.
Please.
We have been talking about unbundling of banking, each and every product, and recently also Sir has mentioned that, in fact, I mean, for each thing we are unbundling. But again, if we see super apps like in fact, we are integrating rather. Because for each and every unbundling of product and services, again, we have a big challenge for integration. Unless and until we are able to offer the integrated app like it may be very difficult for the banks to sustain. So that is my, curiosity. I don't know.
Yeah, that's a good question. So what do you mean to say is that under the garb of super apps, we say that, there is a superstore, there is a full-fledged, whether it is Forex or Agri or everything we want to bundle, and that is what is called super app by definition, right? So where are we unbundling?
So
the
actually,
primary question is
so here I think it's a bit of understanding issue. When we talk about unbundling, we are saying that this service is not provided by the bank itself. Okay. See, we are integrating partners and other players into our platforms or our solution. Essentially something that was unthinkable a few years back. Okay. You would not go 10 years back, you would not go to a banking app to book a ticket on or book a ticket for a flight, isn't it?
Right.
But today everyone is offering it. So if you call that bundling, yes, you are bringing everything together in one place. But the bank is not providing you that service.
Right.
They have unbundled that part to somebody else. Or when we are onboarding a customer, the KYC process has been not outsourced. It has been unbundled. It's not an outsourcing. It's actually bringing another partner only for providing that particular service.
Right.
So that is the difference that I would like to.
Not only that, I just wanted to add up to something.
Yeah.
In fact, even from the customer standpoint also, it provides enormous convenience, right? So it is like one platform, multiple products. Instead of you downloading multiple apps and trying to do multiple things, if all that can be brought under one umbrella, with single sign-in, you are able to consume multiple products and services. I think there is a wow factor for the.
Not only a wow factor, you're saving so much memory on your phone.
Yes.
You don't have to remember so many passwords.
Yes, yes.
Okay, you don't have to update the apps.
Right.
Okay, on periodic basis.
Right.
So there's a huge amount of positive.
Not only that, sir, today the biggest challenge is to retain the customer. Actually, this helps in terms of retaining the customer. You don't need to go anywhere. Everything is offered under one umbrella.
Yeah, and you can cross subsidize.
Yes.
Tata Neu is a great example
Yes.
where one thing you buy on one of the platforms, you get subsidy on big basket.
Exactly.
Right. So tomorrow that is going to happen in banking. You've taken, let's say, some product on the banking platform. You want a loan. You probably waive off a part of processing fee for that. So yes.
Please.
So we are still where you were a few years back. We're still there regarding the KYC updates and all that, because we don't have Aadhaar card, and whatever information we get, we have to rely on just few CIBs and all that. But for the corporate loans, it's not that difficult because they have multiple banking and we have all the information. But for customers, like SME customers, it's very difficult for us to get the right information. And when we're talking about digitally lending, are we also talking about some ticket size for SME loans, and what are the documentations like? Is it e-signed and how is it validated? Like when it comes to, as long as the loan is good and everything's okay, we don't have any problem. But when it comes to default of the loan, so how is it? Is it validated by the regulators? And when it comes to like going to the court, and is it, how does it work in India? Because for us, it doesn't work because we need the real documentation and the real signature.
Good question, ma'am. Understood. I think Arun is aptly placed to answer it. Over to you, Arun. No, you need to just put it, the nitty-gritty of
From a
what, ma'am.
SME, MSME perspective, right, where the loans are typically given to the business and not, I think a lot of time we spend in terms of consumer loans, right? But if you talk of, say, business loans, maybe small ticket, maybe large ticket and all of that. What's happening, at least in India, is that today, because of GST, a lot of information is available on the net, on the go by GST service providers. So there are service providers which will give you the tax information, the income tax information, balance sheets of the company, the P&Ls of the company, and all of that, on real-time basis through government databases, right? Now, from a risk perspective, all of that is available, right? Banking statements are available. Customer can either upload, or you can, through net banking credentials, you can download or you can screen scrape the technology and read. So even if you have 5 banks and 5 statements, today there are service providers which will accumulate all the 5 statements and give you one view. And typically most of the SMEs and MSMEs, like you said, will have multiple bank accounts, right? How do you really read? Because the bank account that you have may not be good or may be very good, but the other may be good or not so good, right? So you have multiple bank accounts which are coming, right? In terms of signatures, today Aadhaar e-sign is available. So the directors can sign and the document is valid. As per the IT Act, as per Reserve Bank of India guidelines, the document is legally valid today. And even the courts uphold it, right? So they're still like, from an Indian perspective, it's an ecosystem which is developed. So it's not just KYC, it is also the fact that the IT Act acknowledges the fact that, the agreement is digitally signed. And Aadhaar signature is valid proof of, and it's a legal document, right? Today, in fact, during COVID, I've signed several agreements which are all e-signed by using my Aadhaar, right? Because my Aadhaar, my phone, everything is linked. So that is there. So look, a lot of these things are actually done digitally. Can going to court be digital? I don't know. We have had Zoom, judges coming on Zoom call and giving judgments. But look, COVID has really changed all of this. So some bit is yes digital, some bit is still physical. Sometimes it's assisted with digital. Sometimes it's like that. So, but are we getting there? I think a lot of Indian startups are there, which is actually now starting to do, say, 100% of the MSME journey, based on digital, let's say digital technologies, including risk underwriting without taking P&L as well, but just going through the cash flow analysis of the customer based on bank statements or based on POS. So, they give the POS, the POS terminal where the customers do use credit cards and debit card. So the POS data is used to really evaluate the turnover of the customer, therefore evaluate his income and then give a loan. So there are these models and these companies which have come, and some of them are doing very, very well.
Arun, just to supplement what you've said, see, if you introduce any technology, and there will always be somebody who finds a very innovative way to use it for lending. Like, for example, in India, we have the fast track system. There are many startups who actually finance logistic operators based on fast track data. Yes. Because they know that this is the amount of
for one trip, this much they're spending.
Exactly. So it all depends on innovation, like how innovative, and people will find a way. To use data innovatively in some way or the other.
Absolutely, completely agree. Completely.
So
I hope I have kind of answered your query.
Yeah, please. One second. By the way, I think Mr. Manoj is there. I saw hands raised in the our Teams meeting also. If you could uncock and make the gentleman ask the question, is it possible? I think he's holding on to. Can he go ahead and ask the question in Teams? I saw hands raised there. Yeah, we'll come back to that. And ma'am, you can ask the question, please. Yeah.
My question is very basic. Please pardon my ignorance. The Indian identification database Aadhaar. Where is the repository, the deposit? Who houses it? The RBI?
No, it's UIDAI.
It's a separate authority.
Unique Identification Authority of India, formed under the Act of Parliament.
I see. And then everybody can access it.
Yes. Not everybody, and there are certain
required stakeholders.
So they have guidelines. They have AUA and KUA. They give license, and those are the companies. So they also analyze their systems and do system audits and all that. So only those. So UIDAI gives access to certain companies. You have to apply and get the access, and then you can further give access to block. So it's not generally I can't access.
I see. And directly. How convenient is to
Very
get an Aadhaar card? How fast?
It's not very difficult to get an Aadhaar card. You can carry out address changes online. You don't have to go anywhere and submit any application. So, and I think most of Indians now today have the Aadhaar card, and that part of it is behind us.
Only Indians or non-Indians? Because my son was studying in India.
Yeah, I think
I think it's only Indian. Yeah, it's only Indian. I don't know if there is a special provision for Nepal, because
I'm not sure about that. I'm also not sure.
My son was studying in India and he has an Aadhaar card.
So I think it must be.
But there are a lot of safeguards around custody of data. Like they are given very specific prescriptions how banks are supposed to store the data and how they are allowed to use it, etc. So that's how it is controlled.
Yes. Sir, one interesting question I could see. When a bank is selling a third-party product, say air tickets, it is generating a reputational risk. What could be the responsibility of the bank for doing such thing? Whether banking reputational regulation permit doing such business? What's your take?
I think, sir, best
So
position.
basically, whenever we sell a third-party product, we do it on the basis of a disclaimer.
Oh,
saying that.
And also.
Yeah. Yes. Okay. The second thing is we don't offer it to everyone. We offer it only to our customers. Okay. And the third thing is we don't charge anything for it.
Okay.
It's a service that is given. It's basically to build engagement of customers with the bank. Okay. So we are not allowed to charge currently the regulation does not permit us to charge anything for that service. So these three things have to be kept in mind.
But
sir, it is permitted.
If I can ask you something, but banks selling third-party products, whether it is financial services or non-financial services, do have a revenue stream.
not for non-financial.
Which may not be charged to the customer as a processing fee, but if you're issuing, say, tickets.
We are not issuing the ticket.
I know.
We are facilitating,
yeah. So the person who's actually issuing the tickets on your behalf
yes,
will give certain revenue back to you, right?
No, they don't.
Okay.
They don't. We are not allowed to accept. We are not allowed to accept revenue on that. No.
Interesting. I didn't know this.
It's only to build engagement. See, basically, what is the concept of a super app? See, just like even when you're in an important meeting, you'll be referring to your phone just to check what is the latest WhatsApp message. Okay, banks want to build engagement. They want the customer to come to the app not only for banking, but for anything else that he needs in life, everything, anything and everything. Okay, so we are fond of saying that, like on a super app, you have everything from Amazon to Zoom car. Okay, oh, we provide everything from first cry to seniority.in. Okay, so we take care of every phase of your life.
And we also do banking.
We also do banking.
Nicely said.
In line to this, my question to Sunny sir is, your emerged, which is often referred as the custodian of trust. You gave us a class just a while ago with what average more than 2,000 crores loan per day. You said, what is the fallback to these personal loans? I would assume there would be a lot of delinquency.
No, I told you, no, it's based. See, all digital lending is based on certain analytical models. Okay, and as I was explaining in, like, when we had this discussion, these models are not self-learning, but we actually draw lessons through periodic analysis of why a loan is going bad. So the published figures are there in the market, which show a very, very low rate of delinquency. Even during the COVID period, it has not had any negative impact.
Is that because you are offering it to the SBI cream clients, or is it?
It's not
It's
SBI cream
phenomenal
client. You will find the people eligible across the population, different population parameters, different locations, not only the metros, but also the urban and, the semi-urban and rural segment is covered. All age groups are covered. So it all depends on certain, the analytical model, which measures many things, including your credit score, etc. It's a highly proprietary one. So, but the idea is that it is not factored towards any cream of the society or anything like that. It's factored towards an output from by measuring different parameters, and not only how much money you have. The person who has a lot of money may not need a loan from you for a personal loan. Okay, they may not even, their propensity of such customers to use such loans may be less.
A lot of AML engine works behind. So that's what Sir in short is telling. Yeah, good. And I think since we are running out of time, for the paucity of time, one last question. I thought I guess Mr. Manoj, you're able to unmute. Can you ask the question?
Yeah. Sir,
Go ahead.
Sir, am I audible, please?
Yeah, you're audible. Go ahead.
Thank you very much, Sunny, George sir. This is Murli Murugesh. I had a question like this. India has the highest fintech adoption rate globally, and with the value of fintech transactions rising from some 66 billion to 138 billions in the next 2 years. What do you see is the future of the banking itself per se? With more of the pie of the cake eaten away by the fintech companies, the future of the banking in this perspective?
I would not be pessimistic. In fact, see, many of the challenges that are challenges in the digital space are banks themselves. They might have been a little late to the party, but that does not make them any less enthusiastic participants. So you have these in three flavors. One is the digital native or the digital bank, a pure digital bank, which deals only in digital on banking products. You have another set of banks who are actually platform players, So they collaborate with a lot of fintechs. They have active participation of fintechs on their platform. And the third set of the banking participant would be the banking as a service provider. So these people would provide white label banking solutions to other players in the market. So there is scope. There is a lot of scope in all these three categories for banks to do very well, and you will not find them vanishing from the market anytime soon. I was just fundamentally, I think what Mr. Ramanathan was mentioning, the trust factor that people have in the banking system, especially in India, is something that stands the banking sector in a very, very big way. Unmatched.
Absolutely unmatched. But underlying is always a bank, right?
Yeah.
Even in UPI transaction, the underlying is a bank. It is there is one layer that gets created above the bank for the purpose of convenience. Therefore, these guys are controlling the customer experience.
Exactly.
But you can't function without a bank. I think
that's true.
So the last final touches, since we have totally run out of time, and just thought there is a reply from our CFO Nepal that Aadhaar card can be issued to any foreigner staying permanently in India or staying more than 6 months in India. Aadhaar card is not a citizenship certificate; it is only identity establishment for persons staying in India.
That's good.
So you can, is clarifying that online. Okay, so hope you have seen it. Yeah. So the last, perhaps since we are run out of time, could you highlight, sir, for the benefit of the larger audience, in the subject of unbundling of banks, two important aspects to be considered in the future course of the flag, which you want to flag off to the stakeholders?
I would say primarily, if banking is to survive, you have to go in for a platform type of solution. You have to use the services of fintechs or startups which have maybe gained a certain amount of competency in that particular area or in rendering a particular service. There is no point in actually trying to build everything yourself. It's not going to be it's not going to be a viable way of doing banking. So unbundling is going to be a fact of life. It's going to be a part of banking, and we are going to see more and more of it. So what will actually banks really do is would be determined to a great extent by their access to low cost funds. Okay, that is their core competence, and that would actually be the reason for them to
Cost efficiency. Yeah. Thank you. Mr. Ramanathan.
I think I will take some cue from what Sir said. Is fintechs, they are in multiple space. They offer wealth management, they offer insurance, they offer broking. Like Zerodha is a good example of discount broking. So there are guys who specialize only in KYC solutions. There are guys who are specializing in artificial intelligence, data analytics. I think there is enough scope, there is enough depth and width. So you can see instead of you trying to build in-house capability, and these are constantly evolving things.
Okay.
These are not static, right? So it makes a lot of sense to partner rather or collaborate with specialists, and you continue to focus on the core.
Okay.
That's where I see a lot of winnability.
And the way a whole connectivity is built up, this through APIs and all, you can change your service a partner, or if somebody else comes with a better product, it's not very difficult to actually switch.
The entire world is moved towards APIfication. Full stop.
Absolutely. Yeah. Now, one last question to Arun. In fact, I'm going to tweak that question. In fact, to the larger audience benefit, including the people who are connected from the less developed countries. Not that every country is having a stack, right? So, but it is very likely that the way the whole thing is, the unbundling has happened in India, the learning curve for people who are coming to the party late is actually, you need not put so much money on it, and they can leapfrog into the next stream of technology. If you could give the same kind of flag off, on fintech, how it will be, especially from a less developed country's perspective? What will be that? Two aspects on fintech.
Look, from a fintech's perspective, right? I think we are just starting the journey. I think there is a long journey ahead.
Sure.
And as we, go on, there will be a lot of evolution which will happen. I see fintech banks together getting into the customer's life cycle, completely from, his journey as a professional, as a human being, and not, like banking or fintech would be completely with the customer during his
Journey.
his life cycle. When right, it won't be different than that. Maybe we are all evolving towards that.
Irrespective of where they head.
Irrespective, right? So in India, there is a stack which is available. In Nepal, I don't know, honestly, what is the stack is available, but I'm sure certain parts of it is available, right? In some other countries, some parts may be available, right?
In
Africa, some part, like in Africa, payments is definitely available, which is not even available in America, for example. So look, like Sir said, if there is technology used, there will be some company which will come out with some innovation, some niche products will come out, and they will start gaining importance. I think it's an evolving landscape, and I think all of this will happen keeping only one constant factor, which is the consumer.
Okay, sure. The center.
I think consumer will continue to be in the center, and actually all of this will evolve around the consumer. It's like, providing rail tickets. Why?
Sure.
Because the consumer wants it.
Thank you, Arun. And we have already totally run out of time. In fact, I had taken 15 minutes more. I'm sorry. So on behalf of the SBIL and on behalf of all the connected participants on call for this particular event, and on behalf of all the cohorts who are physically present here to listen, I'm highly, thanks are due to all the expert panelists who could come here to deliberate and debrief on the very, very important theme on unbundling of banking. So much thankful to you, sir, and thanks for sharing your experiences and a wealth of knowledge. I'm sure they could gain whoever were connected on this call. And since this is already on live stream, people who couldn't participate, today can also benefit over the course of the time. Thank you so much.
Thank you so
Mr.
much.
Arun,
Thank you.
Sanijaj, and Mr. Ramanathan.
Thank you.
And also to our comrade Dr. Shoma and all the participants who are tuned in both online as well as in physical terms. Thank you
very much.
Thank you.
Thank you, SBIL Kolkata, for taking this initiative. Extraordinary. Madhukar sir, thank you, sir.
Thank you so much.
Second.